What's your thoughts on the bank run happening on the Silicon Valley Bank? It's not supposed to be that big of a deal, right? Like, they've got the assets to pay stuff off. It just kind of sucks for the investors of the bank. I think that's my understanding of it, that there's no threat to customer deposits. Am I right or wrong on that? This guy's GM at 4978 MMR. What?
So
No. Come on. You're in a fucking bathtub. What's going on with your mic?
I'm literally using the exact same mic with the exact same strings I was in here last time.
Okay, never mind. It sounds fine. Sorry. Go ahead.
Okay. Yeah, so Silicon Valley Bank is actually like extremely dangerous. Oh man, the biggest issue that we have basically with banks is that they're supposed to match short-term liabilities, right, with long-term lending. And the FDIC is supposed to be there to back them. And they set rules that banks are supposed to follow. But by allowing Silicon Valley Bank to fail, they basically said that everybody's, you can just bank on any bank at any point in time, and they're not going to back anything. Even if you're following with appropriate FDIC rules and everything else, they're basically saying that you can have a coordinated attack and put on any bank, and you can basically short anyone to the ground. So,
yeah.
I don't know. That's extremely scary to me. I don't know why you would say it's not a huge deal.
Did you say something about a wheel?
I don't know why you don't think it's a big deal.
Oh, big deal. I don't know, man. Wait, hello?
Hear me? Hello?
Oh, wait, almost. Oh, shit. I have no idea what you just said. You're literally unintelligible. You sound like you're at the bottom of the ocean. But now it sounds like you fixed your mic. What'd you do?
I literally haven't done anything.
Okay.
I'm sorry.
All right, well, listen. Go listen to the VOD for the last, 20 seconds, okay? But now you sound good, so, okay. Try it again.
Okay, so the big thing with Silicon Valley Bank is that they were one of the most highly capitalized banks in the United States.
Mm-hmm.
They followed all of the FDIC rules in terms of deposits,
mm-hmm.
and yet they basically got wiped out by a coordinated action. More or less what happened was a classic bank run wherein there was an email that got sent out to every single Silicon Valley investor, and all of the VC funds. They all pulled their money at the same time, and there's a liability mismatch between the basically the people with the money in the bank that wanted to pull their money out, and then their assets, which are basically lending long. So the FDIC has been pushing banks to buy a lot of these loans and mortgages and everything like that. And it's not healthy for the banks for them to just let them go under. You're just basically going to end up with a lot of consolidation in the banking industry, and then you're going to end up with a lot of these smaller banks basically folding and going under because they can't compete and because they won't actually be backed by the FDIC when you do have healthy balance sheets.
Wow.
Steve is this dude was on the set of the last Avatar movie.
Well, it looks like you're in the middle of something. But
well, I have to look up and fact check everything. From what I remember reading was that the issue was just that they I think the issue I thought I'd read an article, I don't know if it was Wall Street Journal or Business Insider or whatever, that they just overestimated basically how safely they could perform, assuming that interest rates weren't going to rise in the way that they did, and that was kind of like they took advantage of that for too long and then they got basically fucked for it. But you're giving me like a totally different story, so I have to read more.
Yeah, so there's there's a confluence of things that went on. So the first one is interest rate risk is not required to be looked at by any federal regulations. And so you're right, they were basically trying to squeeze out any sort of inkling of profit that they could get, because for the last 15 years, basically rates have been extremely low. And the thought was that you're going to be in a low interest rate environment for a while. And because of that, the current regulatory rules basically say you don't have to account for it for, a 5%, a historically high increase in interest rates. And because of that, yeah, they did get caught out. But the FDIC was the one the entire time telling them to, not just them, but banks across the entire board to issue fewer loans and buy more securities or more bonds, I guess. That was a huge push from the FDIC to these banks, because the thought was that having these mark-to-market securities is going to be simpler and easier to mark on your balance sheets and to help with wind downs and liquidations. And so, yeah, so one, they didn't have any interest rate.
So then why
hedge.
isn't every single bank in the U.S. having this problem right now?
Because they didn't have like 70% of their investor base basically running to get money out.
Can you link me an article or a story showing that like this happened? That there was like an actual
Sure.
like coordinated run on the...
Yeah, so here, I'll just link you FT.
Oh god, can you give me a screenshot of the article instead of linking me one of the only publications you have to like actually paywall in to like read the entire thing for?
Well, it's all right. Sure, I'll find you something else.
Thanks.
Yeah, because FT, okay. So, what do you want? Wall Street Journal or no?
What
You
I,
have to
just
be all of
or
that
give
one?
me like a screenshot or an archive or something that I can read without having to go through
Okay,
fucking
all
20
right, sure.
plugins.
All right, here's CNBC. I'll dump it in chat and then I'll put it in the room.
What is this bank?
Silicon Valley Bank.
Yeah, what do they do? What services do they offer?
So the biggest thing that they do is they basically hold all the money for most of the VC funds out in the Silicon Valley. So if you're raising a VC fund,
Wait, I don't believe you.
for the most-
How do they make money?
so they take people's assets and then they either lend them out through loans or for the most part they buy bonds.
So they do is buy bonds, and that caused them to massively miss earnings.
Yeah. So basically the interest rate rise, right? So they're buying long dated bonds. So, 5 years, 10 years out. And so with the rate increase and then the increase in rate increases towards the end of the year, and then the few that are coming up, all those basically decrease the value of their bonds, and that's causing them to miss all their earnings. And then they had to sell off those bonds at depreciated prices to meet customer withdrawals.
Okay. So then what's the
so
issue?
So the issue is that basically, one, the FDIC was pushing a lot of these banks into buying the same types of securities. So when everybody was needing to raise capital by selling off these bonds, you have
Wait, explain that more? What do you mean? Or can you
Okay,
say
so-
like the FDIC is saying like you need to only
so
buy
the
or what?
FDIC basically regulates every bank, right? And they say in order to have a healthy portfolio, you need to have this sort of composition of your assets in order to meet your depositor liabilities, in order to remain insured with us and remain in good standing, and then we'll give you an assessment of your balance sheet. And so for the past few years, they've been pushing purchases of treasuries and purchases of other marketable securities as opposed to giving loans, because those are liquid assets, because you can go out and sell them. There's a clear and transparent market price, and you don't need to go to an auction for them. So if I issue a loan to somebody to buy a house, well, that's not a marketable security. It's going to be less liquid to find a buyer for that than if I go out and buy a bundle of mortgage-backed securities.
Okay.
So they've been pushing those, and then as there's kind of been a cash crunch because these securities have been dropping in price because of interest rate risk, everybody across the board needs to sell them all at the exact same time, right? In order to meet capital requirements for all the banks as interest rate goes up. If they didn't do any interest rate hedging, they all have to do it.
So what was the solution to this then? What would have prevented this from happening?
So the first thing would have been just a guarantee by the FDIC for all the assets in the banks because they had an appropriate portfolio that was supposedly well capitalized. The second thing is
Wait, hold
regulation
on. Let's talk through each of these, okay? Because that
Sure.
sounds like a huge deal what you're just saying. Has the FDIC ever fully insured the deposits of any financial institution?
No, not yet.
Then why in this case would that ever be the case? Why would on government dollars would we ever fully insure a bank that's making money off of deposits?
So it wouldn't be on government dollars. There's appropriate assets in the bank for everything that's in there. Should you let it run off for 2 or 3 years, the Fed should be acting and the FDIC should be acting as lenders of last resort, and they should be able to recover everybody's assets and make a profit just by retaining stability in the
I feel like
ecosystem.
I might be crazy, but I feel like at that point we should just fully nationalize all of the banks and just have one United States banking service. If the FDIC is going to fully insure every single bank such that there's a run, I feel like that incentivizes so much insane behavior. Past basically, as long as you maintain like the minimum FDIC requirements, now you can act in literally whatever way you want, and the government is going to fully insure everything. Why not just like fully nationalize every bank at that point?
I don't know if there would necessarily be a huge issue nationalizing a lot of them or providing a national bank for people to go in that's fully regulated. But if you're just going to say that you're going to back banks and put these requirements on them and then not actually back them when they're meeting or exceeding what your minimum requirements are, I don't see what the point is. All that's going to do is cause everybody to go to every other bank and withdraw the money, which was the whole point of the Federal Reserve System, is that you have a set of banks that are backed by the Federal Reserve that aren't going to go down for just like a bank run. That's like literally the whole purpose of the system, is that you don't have massive
was the
coordinated
purpose of the
banks.
system to protect commercial deposits in commercial, like risky tech startup banks, or was it to protect average citizen deposits so there wouldn't be an average consumer run on banks? We've got citizens that are losing like $5,000 in savings or life savings. Was the FDIC really instated to protect banks that were investing in tech startups?
So the banks aren't investing in tech startups.
Wasn't that the whole point of the it's called the Silicon Valley Bank? I thought they like specialized in like startups, especially in the tech industry.
Well, the startups put their money there. They didn't take the money and invest it into the startups.
Oh, so this bank it doesn't do any type of investment stuff at all?
Correct, yes. Yeah,
Okay.
it just has a uniquely concentrated risk of just most of its depositor assets are coming from the Silicon Valley banks. And then they had... can't remember what it was, but basically they had like sweetheart deals where they said, if you put all of your money into this bank, well, then we'll give you preferred lines of credit, right? So we'll expand your credit or lower your interest rates so we can guarantee that we keep your assets here. And so because of their unique customer base, they basically had a bank run all at once. An email went out to these VC lists and the telegrams and everything else that just basically said, oh, there's rumors that Silicon Valley is insolvent, pull your money out. And then just everybody went on their app and just tried to wire out. And just
Well,
cause
you
it
said
to shut
rumors, but it seemed like what's interesting what you're talking about now versus Elon blaming short sellers for trying to take down Tesla. Like it sounds like people were saying that it seems like there's a worry that
So
these
if you're
institutions might be
manipulating stock
insolvent,
price-
and then there's a lot, and then it comes out that they massively miss earnings, and then and now it looks like they kind of are insolvent. Like, is that not like a legitimate concern, or?
It's kind of a legitimate concern, but there's a massive difference between affecting the stock price of a corporation, which only minorly affects certain issuances if you need capital, and certain interest rates, which should be more or less immaterial to corporations, versus having to fire sale assets that everybody in the same industry is going to have to sell if there's a bank run on more banks. So most banks in the nation, especially the regional ones, will have a similar mix.
To be clear, customer deposits are all okay, aren't they? Or are they not?
At Silicon Valley Bank?
Yes. Like they might be having a liquidity issue, but they're not insolvent, are they?
No, they are insolvent now because they're in receivership. No one knows how much money they're going to be able to get out of selling all the assets. So what they're doing right now, they're in FDIC receivership. All the assets that they have, they're going to the market. The bid deadline, I think, is coming up in like in a couple hours, or maybe it already passed. But the bid deadline for that is today. They're basically taking all of the bank's assets that they own. They've gone out to everybody and said, all right, you can bid on the bank as an entirety. You can bid on different portions of its loan packages, different portions of its bonds. And that's all being sold off this weekend. And then they're going to return whatever they can get to the depositors. The second issue that they have is that everybody who went and wired their money out before close of business Thursday is getting priority. So if you wired out money Thursday, you'll get all of your money out. If you left your money in the bank, you're going to get a certain percentage of the deposits. It's looking like that's going to be somewhere around 80%, 80 to 90%. But they're basically incentivizing further bank runs. If you're a business that has over 250,000 in the bank, if there's any sign of trouble at your bank, they're telling you basically to run to the bank and take your money out, not to stay calm. Which kind of like defeats the whole purpose of this system, right?
Huh. Okay. How does a bond... when a bond matures, you're guaranteed to get what's printed on the front of it, no? Or
correct. Well, for a treasury, unless it's a corporate asset, which may,
obviously,
go into
yeah.
bankruptcy.
But
yes,
they were buying T-bonds, right? They weren't just buying bonds from companies or municipalities.
They were buying corporate bonds and treasuries, yes.
Oh, they were buying corporate bonds.
And some MBSs, yeah.
So there is no guarantee that they're on the maturation date they're going to receive what's on the printed front, or?
Yeah, but they're generally very high quality. The problem is that they're long duration, and the interest rates going up has caused their current mark-to-market price to go down, which is why they're looking at a loss for customers.
Hold on, wait. Can you explain this? Interest rates going up means mark-to-market price is going down. Is that because treasury bonds are becoming more attractive, so the riskiness of the corporate bonds, the volatility isn't being compensated properly with the interest rate, or what? What do you mean by that?
Well, no. So let's say that so every bond is issued in a denomination of like 100, and so it'll pay you, let's say, 1% per year, and so it trades at par of 100, and then it gives you 1% every year for 10 years. But now that the interest rates are higher, well, why would you buy a corporate bond at 100 that's only going to pay 1% when you can buy a treasury that's going to give you 5%?
Yeah, I think that's is that kind of what I said, that like because treasury bonds are becoming more attractive, it's making the corporate bonds worth less, so the mark-to-market value is going to fall, because why the fuck would anybody buy it?
Yeah.
Right?
Okay, yeah, maybe I just
Okay.
misunderstood you. Yeah,
Okay,
yeah. But yes, yeah. So in order to do it, the par value goes down from like, 100 to 95 or 96. And so it's not that the riskiness of it necessarily goes down. It's just that why would you ever buy something at 1% when you can get 5, even
Guaranteed.
if they're equally risky? Yeah.
Sure.
Yeah, and so I guess like the issue is that there's just like that maturity mismatch that you're always going to have with banks, and now it seems like it's incentivized for everybody to, whenever there's even a slight crisis at your bank, to pull everything out because you'll be made whole, and the people who get left in or who stay in are the ones that are going to be hurt.
Well, who's making
And
them
then
whole
it's just
right
gonna-
now? What do you mean by that?
Okay, so if you sent a wire out before Thursday or before close Thursday, the bank was still technically solvent. They hadn't gone into receivership, and so they're going to process all those wires. So if you said take all my money out of my account and you put it in on the app, then you're going to get 100% of your money. If you said, oh no, things
Why
are
are you
going
guaranteed
to
to
be
get
fine,
100% of that money? Where's that coming from? Who's making it whole?
Fed wire rules, because the bank wasn't in receivership.
So the FDIC is going to guarantee all of those transactions, even if the company was insolvent?
Well, it wasn't insolvent until they announced their insolvency, which was after close Thursday. Or I guess before Market Friday.
It wasn't insolvent until they announced their insolvency. That sounds like The Office. Like you're like declaring bankruptcy.
So
saying,
they had money in the
bankrupt,
account, right?
No, I understand, but I'm saying like theoretically, everybody wired their shit out on Thursday. Are you saying the FDIC would have guaranteed that all of those wires out would have been honored, or?
Yes, unless there was actually not enough capital for everybody. If literally everybody wired their money out, then it would be pro rata, I think, or maybe on a first come first served basis. I don't remember the exact.
Okay,
wire
so it's
rules behind
already
the scenes.
technically on pro rata. It's just that there's enough money to guarantee it all, right?
Yes,
Kinda,
yeah, and so that basically lets you skip the line. If you chose to pull your money out and participate in the bank run, well then you're protected. But the people who didn't participate in the bank run are hurt by it. Yeah, it just seems insane to me that that everyone has all these issues with the big corporate banks and the consolidation and the failure of smaller banks to kind of be opened, and then you have the government basically saying, all right, well, if you're staying in, we're just going to support the bank run, the bank's going to go under, and then we're just going to incentivize more bank runs against lower capitalized banks in the future.
So what was the solution here?
So one, you just need better rules. There needs to be interest rate risk rules in terms of hedging and in terms of maturation of your treasuries. The second thing is I really do think that Silicon Valley Bank, or not Silicon Valley, the FDIC and the Federal Reserve System should be backing in to guarantee the Silicon Valley Bank to stop more runs in the future, because the Fed has the ability to take possession of all of those assets and let them run off over the next few years and make everybody whole, and then actually probably come out at a huge profit for the government. So it's not even really a bailout, more so than it is just acting in the best interest of banks.
Doesn't it feel a little bit
Because-
shitty for the government to constantly give these like huge bailouts to these private banks that are making like big money?
But it's
on
not a bailout to the bank. All the shareholders, all the debt holders are absolutely 100% going to be wiped out. The depositors are small businesses for the most part. And then
Yeah, but by
some
guaranteeing
VCs,
these
yeah.
assets, you're empowering these banks to make a fuck ton of money, right? You can say that, oh, look, we're saving the consumers, which is technically true, but the consumers are the people that these banks are making money on, right? Which allows
Sure.
them to make a lot of money. So by having the government like fully insure and back that, you're essentially like you're using.
Well, but they've just lost all whatever $20 billion that they had in capital at the beginning of this year in their bank. So
Sure. But I'm saying that
Everybody's-
if all of it was like guaranteed by the government, you're just like, it feels like you're just underwriting. You're using the government essentially to underwrite like all these private banks. I don't know. It just feels kind of like, what the fuck? I want a deal like that.
Sure, but you're requiring them to have all these stricter, terms and conditions of their portfolio. I guess I don't see how it's underwriting all the risk if you're mandating their portfolio structures are appropriate. I don't see how it's taking on any.
Sure, I guess. So
any
you
sort of
believe
risk.
right now that the portfolio structure was inappropriately
Yeah, absolutely.
Okay.
They were buying 10-year bonds at 0% or like 1.5%.
What do you do to like? It feels like underwriting these more appropriately would require them to basically read the future for what the Federal Reserve is going to do, though. No.
No, not necessarily. They could have bought basically interest rate swaps that would have paid out. It would have cut to the profitability in the short term. But if there was a pretty large increase in prices, then it would have, paid out, and they wouldn't have had that risk. I think concentration in these type of instruments, just getting everybody into these mark-to-market securities, just adds concentration risk across the board. Because if there was more bank runs, say, like Fifth Third Bank or some other regional banks, they would all be selling the same securities into the market at the same time and just depressing the price. I think that's pretty inappropriate. And then, yeah, I don't know. I don't know where else I would go with that, but it just seems like if you're going to mandate these portfolios to look like this and then act on basically the best interest of short sellers as opposed to the American public, it just creates a lot of bad incentives that come together. Because again, like if you take a look at a lot of the businesses that are being shut down by this, so like Etsy is like a big one that's being shut down. There's I can't remember all of them, but there's like literally just like probably 15 or 20,000 people on payroll that are uncertain if they're even going to be able to make payroll this week because of the bank going under. And that just like doesn't seem like super appropriate to have all sorts of small businesses impacted.
Yeah, you say that, but the only reason their payroll is uncertain is because it probably sounds like the businesses were like reinvesting and capitalizing those funds rather than holding it more for payroll, right? So there's people like getting like it's not just like poor customers. They had what?
They just had money in a bank account. If you have like 100 employees and you're paying them $5,000 a month, that's like 500,000 sitting in your bank account.
So they were using this bank, the Silicon Valley Bank, was just being used as a normal bank. It could have just been Wells Fargo. They're not getting any extra services or any type of money or greater interest rates or special money market deposit accounts or anything like that. It was just a normal ass bank to these people, the way that they were using it.
Yes, to most of them, yes.
Why were they? Why? Yeah. What is the incentive to use that bank over like any other? I guess.
Because I guess they have preferred lines of credit, and it's just easier to open up.
Okay, wait, hold on.
It seems
what does a preferred line of credit mean?
So that means you can get a lower rate of interest on your loans. So like if you say, oh, hey, I run payroll through this bank, I'm going to leave, $500,000 or $1 million a month to pay my people, then I can get access to loans easier and cheaper or in greater value. I can potentially get, my bank account opened without having or credit cards or whatever, because even though my business is young, I don't have the line of credit there, and I'm not going to have to personally guarantee it. But I mean, again, these are just like normal bank things, I guess. They may have preferred terms, but that doesn't really differentiate the business that they're doing there. Like, I don't think there's any fundamentally different thing that's happening for having an account with Silicon Valley Bank versus like a regional bank versus like a JP Morgan.
Yeah, I just don't understand why you would use that bank, I guess.
Well, I mean, why would you really choose between like any really different bank? It's just mostly going to just be like the customer service aspect for the most part, right? And then maybe a little bit on interest rates, but it's just going to be whatever's your buy or whatever's.
Sure.
Yeah. I guess my last question then is just like kind of about the merger stuff. You said you don't think any company should be allowed to buy another company. I don't think that's exactly what you meant or what you said.
Just like huge companies, I don't like the structure right now of like my path to success is just getting big and then selling to like a really fucking huge company. I feel like that's a shitty area to be in, because it deprives us potentially of like a ton of other possibly new cooler companies that like can't ever exist now because people's goals are just to basically sell to Amazon or Google.
Sure, to some extent, but I guess the thought process is that who other than like very large businesses can like take these niche technologies to scale, right? Whatever these improvements are. If you're like if you're a small business, right, you're not really worried about saving a quarter cent on like every transaction. If you're just running like a grocery store or like a gas station, right?
Does every single business that exists have to be like infinitely scalable instantaneously in order to be successful?
No, it doesn't. But if you can improve efficiencies across the board, I don't see why it wouldn't be desirable. If you're developing new technologies,
Isn't
if
that an
you're
argument to nationalize
not-
literally every single company and let the government run anything? Like, if it's so much more efficient to incorporate it, shouldn't Google just be like the one company that run 50 million things, right? Like,
Sure, yeah, if the government could run everything perfectly efficiently, then yes, it would. It would be.
so like, I feel like Google and Amazon probably have higher GDPs than like a lot of countries. That'd be my guess, right? Like, so why are they like uniquely positioned to run 50 trillion different horizontally and vertically integrated things, but like the government's not?
I don't think they necessarily are in a unique position compared to the government to run those, but I just, if they're able to compete in those marketplaces, I don't see why not, as long as they're not exercising their monopoly power to snuff out innovation in those areas, which I don't think anybody is even close.
How do you
to
know
doing
that? You don't think we could have had other operating systems, other search engines, other like online retailers?
We
Like,
do have other search engines. We have several search engines. The
I
three
think you
big
have
ones,
like one. Who?
Bing.
What is
and
Bing's
DuckDuckGo
market share
and
compared to
Baidu.
what is Bing's market share compared to Google? Also, the only
Search.
reason Bing has any market share whatsoever is because of the vertical integration with Microsoft. So I mean, like, even that's a bad example. But we'll say even for Bing that does have that, can take advantage of that vertical integration. What do they have? Or horizontal, I guess technically. What do they have market share wise?
Bing. Oh, I guess it's only 3%. I didn't realize it was that bad for it. But I
So
guess
what
the
is
question
Google,
is,
like 94%?
Yeah, 93.
Okay.
But it doesn't matter if it's not harming anybody.
But you
I
don't
guess
know if
I
it's
don't
harming
see why
anybody, right? You don't know what other operating systems we could have had or what other search engines we could have had, right? That's true of any monopoly. Like, well, am I hurting anybody? I don't know. It's hard to know, right?
I guess the question is, how are you ever going to demonstrate these alternate universes? Like, it doesn't make sense when you're getting these massive economies of scale and efficiencies. Like, maybe...
Again, when you say massive economies of scale and efficiency, you're justifying monopolies, right? Like, everything should
Yes,
just be
yeah, I think
monopolized by the state at that
monopolies are
point.
necessarily fine. Like, there are some things that do make sense as monopoly.
We're not
regulated
talking about
monopolies.
things that have like geographic restrictions or areas where monopolies are essential. I don't think it's essential that we have a monopoly for software operating systems, or I don't think it's
Sure,
essential
but-
that we have a monopoly for a search
But
engine.
you get... it's like this network effect that goes up exponentially as you get more and more people using it, and as you get a service more and more refined. If you're running 3 parallel search engines or 5 and you're doing the same sorts of optimizations to all of them, or if you have, 1 million people on a social network versus like 100
Yeah,
million.
I don't disagree.
get-
I don't disagree with any of what you're saying. I understand there's obviously gains to be had. I like the fact that my Gmail and my cell phone and my computer all fucking fuck each other and work together. That's fine. But what I'm saying is that argument can be used to infinitely justify like every kind of like monopoly ever, right? That we should just there should be one company running literally everything because the integration is so good. But I don't think we'd.
Well, everything that there's a natural monopoly in, sure.
But yeah, but I don't think there's a natural monopoly in software. For like a search
Why
engine
is
or
there
like
not?
social media. Why would there be? Because you can have like 5 different social medias. It's okay.
Because you have social network effects, right? If I'm selling something at a marketplace, and I'm taking the same time and effort to sell, one banana stand, if there's 1,000 people that go to that marketplace, I'm going to sell a lot more bananas than if 5 people walk by it every day. It's the same thing is absolutely true with social media. If everybody was on one social media, and you could have the same impact, you would just go to the biggest one.
Yeah, but what if you get banned
for
from
the
that
same
one social media? Or what if that one social media implements a policy that you don't like? Now you have no alternatives and you're fucked, right? What if there was no
Sure.
Twitter? Any girl that posts nude pictures on Twitter can't do that on Instagram anymore. Or what if you get banned from Facebook and Facebook is running videos and everything? Well, now you have no like video platform anymore. Like, or what if there could be like cool, innovative? What if there
That
could be?
doesn't sound like a problem. That doesn't sound like a problem. That's an antitrust problem. That sounds like a problem that should be dealt with either through legislation or through the court system, and
You want
not
to
antitrust.
legislate? Why would we legislate all of this when it could probably be solved by like market forces?
How are you going to solve it with market forces if you're just creating a bunch of smaller markets?
How? Because of competition. Isn't that literally the whole point of capitalism? The idea that like
I
multiple
don't think
firms will
competition-
compete to like deliver products to the public that they want.
Sure, yeah. But, oh man, let me think. How do I explain this? So, all right, so when you're just having 1 or 2 people banned from these places, it doesn't necessarily make a market force that is going to necessitate innovation. If there's issues with certain things not being allowed on a platform, let's say Facebook takes over, then there necessarily will be another corporation that takes over. and
Unless that company
expands
is
into
almost
those
like
niches.
monopolized the industry because there's only like 3 social media platforms. I think it makes it really hard for another company to come in and take over. That's kind of my whole point.
I don't think so. I mean, look, we had MySpace. MySpace was the biggest. Facebook took over. You have TikTok, Instagram,
The
Vine.
era of
at
MySpace
some
is like fundamentally different, I think, than the area we live in technology right now, right?
point. Wait,
like,
what?
Like the internet
happened?
barely existed in like 2004 compared to compared to how ubiquitous it is now. I think cell phones changed a lot. Like there's a lot more people on the internet now. The power and strength of like a large company today. Like for instance, how long did MySpace last? I'm curious.
Probably 10 to 15 years, if I had to guess, or at its MySpace. So it's been around 19 years. I would say it probably went out around 2010, 2015, I guess.
2015?
At the latest, before it was totally, absolutely dead.
Don't you think it was probably out of style quite a bit earlier than that? I would say, right?
Yeah. Well, 2010, yeah, was my guess, because 2007 was the $12 billion valuation. In 2012, 2009 was when Facebook got bigger than MySpace. Yeah, so it was probably 2010 to 2012 then. It's probably the end of MySpace.
And then how long has Facebook been in existence for?
2004. So it started like half a year after MySpace, or a year after MySpace.
Do you think that Facebook is going to be in existence for about as long as MySpace was? Or do you think it's going to like 2x or 3x? Like I think the scale of everything is changing quite a bit now.
I think Facebook's going to stay around mostly because of the user base, but it seems to be losing a lot of people to competitor platforms. That's why they tried to buy Instagram to compete with TikTok and those other, Twitter to some extent. I don't think Facebook itself is necessarily going to be as dominant. And I don't know. It just seems like it's losing share year over year over year.
Wait,
the big thing that they have is just advertising.
Facebook is?
Yes. Facebook stopped having growth, I think, last year.
Stopped having growth and losing significant parts of user base. So two kind of different things, but
yeah, I mean, it starts in, I don't know. It starts like one thing at a time. Some companies fell faster than others. Like GE was basically an unstoppable corporation at one point, and now it's basically dead. Just because it doesn't burn out in 10 years, like something else, doesn't necessarily mean it's not going to be short-lived and can't be competed against. I don't know. It just seems wild that you would say that something has been dominant for 10 years and now it just deserves to have antitrust taken against it when there hasn't even probably been that much time to compete against it.
10 years is like a fucking forever in internet time.
Yeah, but 10 years is nothing in normal corporation time.
Yeah, but we're not living on normal corporation time. We're not living in internet time. For software companies, I probably wouldn't evaluate them by normal standards, right?
I mean, the only long-standing software companies that we really have are Apple, Microsoft, and IBM for the most part. Intel maybe. Most of the other hardware companies have died, or software companies have come in and out. I don't necessarily see that they've even been around as long as Ford or GM or anything else. I don't see that as an issue, that we just don't have new companies coming up and burning out every few years. That just seems insane turnover. I don't know.
I mean, I think you keep saying like it seems insane, but like I think it's insane that we've had like one operating system for our computers since the inception of computers. Like that level of vertical integration is kind of fucking crazy to me. And I don't know how like anybody who's like a capitalist would like defend that. Like it seems like very clearly like anti-competitive. Like really nobody else in the world could come up with like alternate operating systems. It was just one. Like Microsoft solved it. They were the first guys and that's it. Like that seems
Apple
wild
has
to me.
a pretty huge share. Linux is getting a very massive share.
What is Apple's market share for desktops? Don't throw iOS at me. Because iOS, I'm going to throw back at you and say, well, that's probably that they share like a duopoly with fucking Android. Because I'm pretty sure Android and Microsoft OS,
sure.
Or not Microsoft OS, Android and iOS probably have like 95% of market share.
Sure. I guess 2022, Apple's looking at 17% of all PC units.
Wait, what did you say?
And that's 17% as of the end of 2022.
You said PC units, so I think you're including laptops in that, is my guess.
Yes, yes. And then in terms of cloud, Windows is being replaced by Linux. That's basically happened.
Yeah, sure. cloud. So for consumer desktops, I think we're just
Sure,
we
but doesn't
start-
it also leads to a lot of efficiency where you're not having to develop
I
on,
know it's
50
efficient.
different
I
systems.
understand. Where's Ecanoboi? I think I said exactly this is how this conversation is going to be. You're just going to throw at me like the upsides of some of the efficiency gains of being a monopoly, which I agree they're there, but like I just think it's kind of shitty that we basically said that no more competition allowed because of some of these upside efficiency gains from being a monopoly. That seems like kind of shitty to me.
But we're not disallowing competition. There is competition, and people are
There
winning
is no
in other
competition.
sectors.
Why would you wouldn't want to compete? You want to sell to these larger companies. That's it, right? There's who's here like saying like, oh, I want to make like a competing OS. Nobody's saying that. If you have any good product that works on desktop or any good product that works in software, your goal is to sell to one of these like 3 huge giants. Like that's your goal every time.
I guess.
Nobody wants to compete with Google or Amazon. You want to be bought by Google or Amazon. I think that's like fundamentally like anti-consumer, in my opinion.
Yeah, I don't know. It just feels like that if Google or Amazon or whatever is, they can just invest in it themselves and build it out themselves.
They don't ever do that though, do they?
They do a lot. They have a lot of internal teams that like build things. Like if you look at Alphabet's entire, structure, they were originally just Google, and then they had a bunch of other venture arms basically inside of it, and then they split themselves into the holding corporation Alphabet, and then Google the search engine, in order to actually separate out all their different investment arms that they were
Okay,
doing.
why didn't Facebook just build another like social media platform? Why did they buy Instagram?
Didn't they try? I thought Facebook had something else that was supposed to compete with Instagram, and they just couldn't.
Sure, but I mean like that so
No.
so they couldn't compete, so they just bought a competitor. Like that just seems like really shitty. So rather than having like Instagram operating as its own kind of like autonomous, like, oh, another social media, oh, they got bought by Facebook.
Sure, yeah, but I don't know if Instagram would have been viable on its own anymore, right? They didn't have the ad infrastructure that Facebook did, and that's really what's driving their profitability. It's
Yeah,
not
but look at what you just said. That's
building
another
replacement.
example of like a vertical like integration that's like crushing competition. Why does Facebook have its own advertising entire like structure built out, right? Something that they can use to basically force competitors to sell to them. Like you can't compete. You
Why
don't
do they
have
have
like
it?
other businesses that we own as part of our
Why
business.
should
So
they
now
be
my business is
forced
gonna.
to sell their data to somebody else to be able to use?
I didn't.
When they can do
because it's
something to compete.
anti-consumer.
You're saying that they're no longer allowed to compete because they're so large. You're saying that because they created a Facebook platform, instead of going to a traditional advertiser, they're not allowed to make their own advertising platform.
I'm saying
Like,
that if you're
that's
telling me, because it's antitrust, because if you're telling me that like other companies can't even compete now because of the vertical integration that Facebook advertising has with Facebook, the social media platform, and I was like, oh, cool. Well, I guess we're just done
So
getting more
you'd be
social
fine
media.
if they were allowed to sell their data to other advertisers,
If they wanted to sell their data to other advertisers, I
because
guess,
then the
I
other
don't
advertisers could compete with the same data.
know. If they wanted to, sure. I'm just saying the idea of them like owning like a media, the idea of them owning like advertising and social media just seems like you're like.
How is that any
oppressive.
different than like television or radio?
If there was a TV station that like owned and did all of its own ads and also did like all of its own like broadcasting and like had its own like studios for entertainment and everything, I'd probably say the same thing.
I mean, that's the way that most of them have been run for a while. As far as I'm aware, like even just like Spotify has their own like ads, right? You can just pay Spotify; they'll create ads for you, put it on their platform. They're creating the ads, they're creating the user data and everything else. And I wouldn't say that's a monopoly either. I just think it's like a lot scarier when you have all the data just flowing around to whoever wants to buy it for whatever reason or not reason. And I think that company should just be allowed to compete wherever, as long as you're not, and ultimately ending up harming consumers. I don't think it really matters if you want to integrate vertically or horizontally. It just fundamentally seems just like a violation of like your right to association and your right to free speech.
Yeah, you're okay. You're just justifying
And then-
monopolies again. Like every single thing you say is just justifying monopolies.
Because monopolies aren't necessarily just bad. Like
I think
you're just putting out-
monopolies are almost necessarily bad. Yeah, the only time that's why you need like an exception to say like, well, in this case, a monopoly is okay. But by definition, I feel like in a capitalist society, a monopoly is bad because it discourages the primary function of a market, which is to have competing firms delivering good products to us. That's like why capitalism is supposed to work, is because firms compete. Otherwise, if just one firm,
but
they
if
say,
they're-
oh,
but
I'm
if
going to
they're
charge $5 million for a cheeseburger. And it's like, oh, well, fuck me. As long as 2 people can afford it, it's worth it for the firm to operate
Well,
this
no,
way.
because now you're putting your market power, which should be the government's burden to demonstrate that the monopoly is actually harming people when you're charging $5 million for a cheeseburger.
Yeah, but you're not even acknowledging any harms. You're just saying like, oh no, like it's okay
There
because
could
like
be
there's all these
potential
gains.
harms, but you would never accept that there could hypothetically be harms, and then act on it. Like you're just proposing hypothetical harms which may or may not exist and which may or may not happen. And it could be that in these alternate universes that things are significantly worse by allowing by forcing competition. Products could just be worse because you don't have that one person.
I mean, in a hypothetical harm, that's what all monopolies are, is demonstrating hypothetical harms, right?
They're not demonstrating anything.
Well, no, I'm saying that like if you want to prove that like a monopoly is bad, like by definition, you're kind of talking like hypothetical harms, no? You're trying to say that like it could be better otherwise if there was no monopoly here, right?
Yes, but those are demonstrable. Saying that there could be innovation. What do you mean?
How could you demonstrate that there could be innovation?
I don't think you can demonstrate that there would otherwise be more innovation.
Well, then how do you escape what I'm saying that like for proving any monopoly, you're demonstrating you're always talking about like hypothetical harms.
For any monopoly that you look at, you can very easily show what the market price would be without the presence of that corporation in, and then you can show.
Wait, you can very easily show what a price would be without it? How?
You hire some economists and they do the analysis for you.
Really?
Yes, yeah. Oh, I mean, that's what the FTC does.
Sure, that's what you do, but that's a far cry from like can very easily demonstrate. I'm pretty sure these things are all like pretty hotly contested, no?
I mean, yeah, they're hotly contested, but I mean, I think they're fairly straightforward analyses.
There's no shot are these straightforward analyses that in another media environment or in another market environment where there are 3 other competitors, what hypothetical new innovations or products could exist? I mean, like, unless you're literally very clearly saying like this price is marked up too much, maybe, and then even that's going to be up for debate, right?
So for the little harm analysis, you literally say, all right, let's say that we have the meat packers, and we have all these meat packers colluding on price. And because they're colluding on price, we can show that the price is probably 5 to 15% higher than what it otherwise should be. Those analyses are pretty easy. You can't really go out and say, all right, well, if we had 3 competing firms instead of 1, what would actually be developed for the search engine? We don't, because we don't know what those firms would or would not do. And we also don't know what innovations are basically being done by that firm that would have been done that wouldn't be done by competing firms.
I don't understand whose point you're trying to prove, mine or yours?
Mine. Oh, dude. I'm sorry. I'm just really bad with these words. But all right. So, in
like
your
right now,
universe,
let's take grounded in one example right now.
Sure.
Is it possible? Like, how do we not know that there couldn't have been like way cooler or better search engines created?
We can't.
Okay, but like, yeah. So, but the fact that there's like a 95% market share of like one search engine, doesn't that point to like a bad environment where like there doesn't need to be a cap like that much of a dominant?
I think that points to an environment where we have a very, very good search engine that other people have tried and failed to dethrone.
Who's trying to make a search engine right now? Like if
China there was multiple competing ones at the beginning when Google launched. Google outcompeted them by a lot. DuckDuckGo, I think, is like a privacy-oriented one. There's, I think, Yandex overseas and Baidu overseas. And then I think Yahoo still has a search engine. I don't know how many people actually use that, but my assumption is that one's still pretty big.
Do you think that it's harder for these other search engines to compete because of all of the vertical and horizontal integration that Google has with their services? So for instance, I can sign on to my Google account across different devices, like cell phones that might be running a Google operating system, or like my email works better with a browser because I can sign into like my browser like exactly with one Google account across everything. Like, you don't think that makes it really hard for those other services to compete?
I don't think it makes it hard for the search engine to compete necessarily, no. For the entire suite of products that are integrated together, potentially. But I think it also provides a massive benefit to the consumer that they're able to have these free tools.
We're looping. No, I'm not denying the benefit. I don't know why you keep talking about the
sure,
benefit.
Yeah,
I use these products. I know there's a benefit, obviously. But like by acknowledging that benefit, I think we're literally saying that like, yeah, like I don't know if I would ever use like another competitor that was developed because of that benefit. That's like the issue.
Yeah, unless you have a product that was better, but you could still use the other portions of it, right? Even without bundling, you can still use. like you can still use these other projects. If you use Gmail, you're not obligated to use Google as your search engine, right? You can still go to Yahoo, you can still go to these other places. You just go to Google because it's convenient and gives you everything that you need, and you're not really seeing any benefit other than the search results that come out, right?
Okay. Yeah.
I
I just like I don't know even what I'm arguing against right now. The integration between all of these different products and services obviously makes it super hard for any other company to ever compete. Like, I don't know if I would ever use, I don't know personally if I would ever use like a non-fucking Google phone, just because of all of the integration that exists right now with my currently existing like stuff, like my phone, my browser, and everything else. And so like if somebody wants to compete to take that away from me, like damn, they're up against if you want to compete with me on a search browser to win me over as a customer, you're competing with phones, you're competing with email, you're competing with my calendar, you're competing with so much shit. You're never gonna win. I'm never using your fucking product. Even if it's a better product, I'm not gonna use it. I think that's the issue. But it seems like you're like, oh well, that's good because it's like really
it sounds
cool.
like they've created a wonderful ecosystem that has everything.
Exactly. So you're doing the justify. Yeah.
Like I don't see how you're just saying, oh, potentially in the
I'm not saying
future,
potentially. I'm giving you like a.
No, you're saying that they've created this big, beautiful ecosystem, and that if there is 3 competing companies, then one portion of that ecosystem might exist and be slightly better. But then I'm not going to have this big integrated ecosystem, or I'm going to have another ecosystem that's slightly better and integrated because.
Yeah, but when I'm arguing, first of all, you can create ecosystems within different companies. That's completely possible. APIs exist, number one, and number two, yeah, I'm arguing that like I don't like the concept of an ecosystem because it's essentially like monopolistic in nature. That's what it sounds like to me. Because like were these ecosystems not existing, there would almost for sure be more competitors in these arenas.
I don't think there would be more competitors in the search arena. I don't think there would be more competitors in the advertising arena.
Okay.
Maybe in the other portions, like in email or stuff like that, in terms of the free consumer-facing products. But I think you would end up with the same situation where you would have competition in one area, and then someone would figure out how to integrate and do everything together. And then
well, that's what I'm saying is the integration should be like illegal. Fuck them.
Well, Rage, but wouldn't it make sense that it would stymie competition if we have these incredibly vertically integrated companies that take over multiple markets? Like, for instance, if I wanted to make, let's say that every charging station for electric vehicles, was like a Tesla charging station, right? But let's say that I just wanted to make electric cars. Doesn't it necessarily reduce the chance that my innovative electric vehicle technology would get broadly adopted if nobody would be able to charge it on a broad, sort of generalized, available charging network?
Do you think that's like a issue where that's an antitrust thing, or do you think we should literally just do the same thing we've done, like the EU does cell phones, and say you must charge off of USB? Does that sound like a legislative issue?
But that's an
because,
antitrust regulation.
Most vertically integrated monopolies are actually great for consumers because it provides consistency in terms of products delivered. You can guarantee your the quality of your product across the entire lifetime. You can guarantee that you have the production that you need for everything all across the supply chain, that you're not going to be running into hiccups where you have to renegotiate contracts. You're going to have massive consumer welfare benefits for the most part, assuming that you're not exerting monopoly power of locking people out of, say, buying iron in a steel plant for your cars, and then locking people out of the ability to do that. But for the most part, integrating these vertical monopolies on average is good for the consumer until people start actually exercising welfare power. Market power.
But what you described is an antitrust regulation, right? It's like, hey, this vertical integration is bad, so we're gonna force you into adopt a generalized, sort of more modular technology, right? Sort of like how like your homes.
That's not saying you're not allowed to have chargers and a car battery. You're not allowed to have chargers and make electric cars. They're saying that if you're going to do things, we're going to standardize this the same way that we standardize the oil blends and everything else across industries.
Well, but it sounds like the same thing, though.
No,
what's the difference? I'm asking the question.
Saying,
what's the difference between like a regulating agency saying, hey, you're not allowed to make specialized chargers for your special EV, and a regulator saying, hey, you can make chargers, but they can't be specialized? I mean, these seem like the same functional thing.
No, you're saying that if you make EVs, then you can't make car chargers. That's literally what you're saying.
That's not what I'm saying. Because what you're saying, because using the EU, I mean, the EU regulation is a perfect example of the kind of thing that I think makes sense, right? Where, yeah, I mean, if Apple wants to make USB-Cs, I guess they can, right? But you cannot make a specialized, like, only Apple
Yeah, but then you're
device technology that can charge phones, right? That's an
yeah,
example
but then
of
now you're
tying
limiting.
that
But now you're
monopolies can
limiting
take
Apple's
advantage of.
technology to whatever technology exists as well, because now
So
Apple
what?
can't
So I,
have
Yeah,
do
but
you
like
think the
also,
EU
but like, wait,
regulation
wait,
is
real
good or
quick on the
bad?
tech side, like, how many people are like happy for like all of the competing standards? Like, I feel like it's one of the biggest memes that we constantly complain about, like in the tech world, that there are like 52 different plugs and adapters and chargers, and like I'm pretty sure almost everybody ubiquitously enjoyed the USB-C form factor. Like, it can be a little bit complicated to figure out what exactly is implied by the standard sometimes, but it's way better than having like 50 million different types of fucking plugs.
Sure, but now you're saying you can't innovate at all. If Apple wants to
No
have,
one is saying that. It's just a form
No, 'cause-
factor. You
well,
can,
but-
But no,
wait, do you
but
know-
if you're
do you know
stuck
what
with
happened in
USB-C,
the-
you can't. If you're stuck with
No,
USB-C,
that's-
you can't innovate on your connection lines.
That's
You
not what
can't
the
say,
EU
"Oh, we
did,
have a new-"
though. The EU didn't say you have like USB-C is the always and forever technology that you have to use for charging phones. They established, I think, a cooperative committee of looking at different ways to design chargers so that you don't fall behind innovatively, but also at the same time establishing a broad consumer standard that if you want to sell a device that charges phones, it has to be the same sort of unified standard that we agree on. I mean, it's a way to try and blend the utility of having
No,
a unified
they're
standard
locking
and
Apple
also
out of innovating on their chargers. And Apple's just not going to have any chargers anymore. That's literally how it's going to go in the next
okay, let's
generation.
look at wait. Let's look at their proprietary like Thunderbolt and shit. What were
I don't
the
know why you think
innovations? What were the innovations? Like,
I
were there
don't know.
any
I'd have to
Apple
ask an Apple
users?
engineer.
Well, sure. I mean,
Yes,
like,
but yes, yeah. The
are there
Thunderbolt
any
was
people that are like,
superior
oh
to-
god, like they're using USB-C now, I can't take advantage of these proprietary Apple connectors? Like, is anybody thinking that?
Maybe not in terms of those direct terms, but sure, there's a lot of engineering features put into it that aren't in the USB-C and that Apple thought was appropriate to provide to their consumers. Yes.
I disagree. I don't think there were any. I think it was a way to lock you into buying certain shit. But I could be
Right.
wrong unless somebody can tell me something different. But like, for instance, if somebody's like, oh no, like Thunderbolt can do way higher data transfers or 7,000 watt charging that USB-C just can't handle.
You want
like,
to talk to an Apple engineer about why Thunderbolts are just way better than USB-C? And
Sure.
why the standards are?
Yeah.
All right, yeah.
If you wanna
let's
bring one on,
bring
sure.
Boy-
Rage,
bring
but
Boy hop up.
But with
okay,
the,
I get to
with
bring
the
Louis
EU's
Rossman
regulatory,
on though. Okay.
But with the EU's regulatory framework, again, like the Apple engineer can go to whatever the committee established for this is and make the case that, hey, the USB-C is an inferior technology for these reasons. You need to
But why should
adapt it in this way to make it better, right? I mean, there's nothing stopping like Apple engineers from making that case.
I don't know. I don't think you should ever have to go to a regulatory commission to say that I've come up with something new and improved that I want to sell to my consumers, and now you're just not going to let me sell it to them.
Well,
Like,
wait, but
that just
don't.
seems like
That's like,
seems like
we do that with so many
anti-competitive.
different regulations, though, right?
So-
like you have to prove that like your products are safe and that they're beneficial to the you can't just
So-
sell anything and just say it's innovative, right?
All right, so here's the difference. USB-C is a connector. The Thunderbolt's an electrical standard, is basically what he said. So I assume it's for charging and for transferring energy along the wire. I assume that there's like a fundamental difference between the two technologies.
What do you mean fundamental difference? Like it's like a different, like it's like electricity 2.0, or I don't understand what you mean by that.
So I don't know what exactly it does. I'm listening or watching him type right now. But again, they're different standards. So USB-C is just a way to get devices to communicate with each other. Sometimes
Wait,
with-
no, hold on. Wait, real quick, hold on. USB-C is just a form factor. It's like a square. Like that's all
It's
USB-C
not
is.
just a form factor. It has to do with the electronic messages that get sent along, and then the channel for electricity that goes through. I don't know. I'm not a double E.
Well,
But
wait,
I think
wait,
there's-
hold on. Am I a more techie person to correct me? I'm almost positive USB-C is literally just a form factor. Like you can have anything. Like it could be. I'm pretty sure you can have theoretically USB-C 2.0 or USB-C 3.0 or USB-C like different. You can have a USB-C cable that only does power transfer, or you can have a USB-C cable that does data transfer and maybe no power. It's just a form factor. There might be some like protocols or whatever that are more, but.
Well, wait, but like RagePope, I think we're getting a little specific here, but like if we imagine, I think the electric cars is a good example, right? That if we imagine a scenario where the charging infrastructure is entirely Tesla dominated, that like to charge an electric vehicle is
we go to
way
something simpler. Can we
more.
just go to make regular
Well, I
cars?
feel like
We
this
have-
is.
we have
well, I
iron,
think this is
steel.
pretty simple, right? I mean, like, I think that I mean, I think the example makes a lot of sense, right? It's just a hypothetical that if we have charging infrastructure that's basically Tesla dominated, and that like it's 1,000 times more convenient to charge an electric car if you have a Tesla versus any other brand. Let's say that I have an innovative electric car technology, but I'm not allowed to use Tesla charging technology.
All right, here.
And
He's an AFK. Can you pull in Spinboy to argue about this? He's all the way down at the
it
bottom.
seems like you're really unwilling to answer that hypothetical. Like, it doesn't make it harder to
No,
enter
because you're just saying you're
the
not allowed
electric
to
vehicle
compete.
market. Okay, but Rage, but doesn't it make it if you have to have a fully vertically integrated company, right, in order to compete on one aspect of a technology that you feel like you have an innovation for, doesn't that raise the barrier to entry
No, absolutely
and
not,
make
'cause you can just
a
get a
more
converter.
less competitive
You can just
environment?
Let's get a converter. All right, Spinboy. Tell us about
Okay,
that.
but you're
not
saying, but that
gonna-
might not. You're saying you have to build extra technologies out if you want to
Well, you
innovate
have to
on a
build out
single
you have to
point.
build out chargers anyways, but now you're piggybacking off their infrastructure. They spent all this money building out their infrastructure, and now you're saying that you should just be able to use it for free and get all their
No
investment.
one is saying
but
for
that's
free.
what-
We're
that's-
just saying that, like,
that's-
by you saying they've invested in industry, we agree, but they're investing in that infrastructure to protect their
Well, wait,
industry, which makes
but
it not
okay,
competitive.
RagePope.
Right.
RagePope, I have a question. Okay, if Shell had like proprietary gasoline and Shell had Shell cars that could only take Shell gasoline, and the same thing with Exxon and the same thing with all these other oil and gas companies, do you think that we would have like better gasoline that was more fuel efficient, or do you think you would just have a much less convenient consumer? You think we would innovate gasoline and make gasoline much more fuel
Yeah,
efficient?
you can design engines
Oh, come
around specific fuel types and get way better performance. Yes.
I told you that
Yeah,
this is what
absolutely.
this combo would look like. Okay, fuck you,
I'm
Ecanoboi.
sorry,
All right,
like
here,
that's
Spinboy.
that